Hello friends, today I have brought to you the case study of a very interesting company which is into mobile advertising. I've got a lot of requests to make the video of this company and here it is. If you haven't subscribed to my channel, please do subscribe right now and activate the notifications by hitting the bell icon. And if you haven't joined my Telegram channel, please do join right now because I will be sharing a lot of new updates and views on my Telegram channel. So why I have chosen Affle India, as you see, I am putting a poll in my community for you people to choose the best company on which you want the videos, and almost 50% of the people had chosen Affle India in the last poll. So that's why we have made a video on Affle India, and let's get started. So for the introduction, Affle India is a consumer intelligence driven mobile marketing platform. This may sound a little complicated for you, but I will simplify it as we go further. So consumer intelligence driven mobile marketing platform. In a simple words, Affle India is into the business of mobile advertising and they have a platform on which people can come and advertise and reach billions of mobile users. It was founded in Singapore in 2005. So the parent company is Singapore based and Affle India is a multinational company. It entered India in 2006 and the platform gets customer engagements, acquisitions and transactions. What are engagements? When you see an ad, when you click on the ad, you engage with the ad, it is called an engagement. When you try to display an ad from in front of some user and they click on the ad and they give their information and that information comes to the advertiser, that is one way of acquiring the customer, which is acquisition. What are transactions? When somebody clicks on the ad and they go to your website and make a purchase, that is called a transaction. So their platform advertises in all the three formats. Their aim is to get better returns on the marketing investment. So if you are spending on advertising, if you spend on two different platforms, you may get two different results. So what Affle India promises is that if you advertise on their platform, they will get you better results for lower cost of marketing. It brought an IPO into India in August 2019 and the promoter company is Singapore based company. So Affle India is a consumer intelligence driven global technology company. It has a track record of 15 years and its business model, as you see, is very different when compared to a lot of companies in India, and its platforms and data platforms are scalable. That means they can grow the company, grow that platform to a bigger level with very low cost, and they have a lot of technology based assets and patents, and their growth strategy is sustainable as they have been showing consistent growth in the last several years. In mobile advertising, it is one of the leading platforms in India and it has partnerships with a lot of big companies, brands in India and also abroad. Now let us see a few milestones which this company has achieved in the recent past. So it was founded in 2005 in Singapore. In 2006, it established its teams in Singapore, India and UK. In 2007, it launched SMS 2.0. In 2008, it launched SMS Live. So like this, on a continuous basis, every year it has been launching several new products. And in the recent years, they have also started acquiring new companies. In 2018, they acquired Visuary platform. In 2019, they acquired Chauffeur and another platform called Revex. In 2020, which was very recently, they have acquired MediaSmart and a new company called appnext. So if you see, this company has been acquiring a lot of other smaller companies and also platforms to grow and develop its technology and take it to the next level. Now let us talk about the promoter of this company, Mr. Anuj Khanna Soham, who is the chairman, managing director and chief executive officer of this company. He is a technopreneur with 19 years of experience in leading technology products. He had co-founded a couple of companies earlier called Anitas Technologies and Seclo Technology. He's a graduate in computer engineering from National University, Singapore. Stanford Executive Program, the Graduate School of Business, Stanford University. He's an alumnus of Harvard Business School. So if you see, he has a very good technical background and he has been managing the company which he has founded pretty well. Now let us understand the group structure of this group companies. So the original Apple Holdings Private Limited belongs to Singapore, which is the parent company. Under that, if you see, there are two companies, Affle Global Pte Limited, which is again a Singapore based company, and Affle India Limited, which is a Indian company. But further down, if you see, all the other companies, the newly acquired companies or newly established companies are being formed under Apple India Limited company. So a lot of weightage has been given to the Indian company and the entire business has been streamlined to grow under the Indian company itself. So Apple India Limited has a subsidiary, Affle India Limited has a subsidiary, Affle International Private Limited, which is based in Singapore, and under that there are several other companies like one in Indonesia, Dubai, Spain, and a recent acquisition was in Singapore, which is appnext Pte Limited. So it is a simple structure. You can pause the video for a second to understand this better. In the parent company, you have very interesting and big investors, which are Microsoft, D2C, Itochu, Bennett Coleman and Company, and Centurion. So if you see, the global leaders have a lot of trust in Affle India, and this gives us a lot of confidence to invest in Affle India. Broadly, the company has two business segments or two business models. One is consumer platform, the other is enterprise platform. Majority of the focus is on consumer platform, majority of the revenue is from consumer platform. Now let us understand what are these two. The consumer platform is the platform where in they are trying to build their mobile advertising business. Through this platform, people advertise to reach billions of people through their mobile ads. So the consumer platform delivers acquisitions, engagements and transactions, as we have discussed, for leading brands. They have different types of marketing like retargeting and push notifications also. What is retargeting? Whenever you go to a website and later you don't do any transaction and close it off, and later you go to your email, if you see on the corner, you see an advertisement of the previous website which you have visited. So that is a retargeting ad. They are targeting you again and again for the same advertisement. What are push notifications? On your mobile, when you are using some app or you are using your mobile phone, suddenly you get a notification without you going and checking that information. So that is push notification form of advertising. So 97% of their revenue comes from the consumer platform and only 3% comes through the enterprise platform. What is the enterprise platform? In the enterprise platform, they are helping the offline businesses to come online, and they are also doing their O2O commerce marketing. What is O2O? Online to offline marketing. So if you have a physical shop, there are a lot of people who have physical shops. They are trying to advertise online to get walk-in customers in their physical shop. So that is online to offline marketing. So if we see the types of advertisement which this company does, that can be classified into broadly two types. One is cost per converted user type advertisement. The other is non-CPCU. So this may sound a little difficult, but it is very simple. You can understand CPCU and non-CPCU. In non-CPCU, there are two types. One is cost per click and another is cost per 1,000 impressions. What is cost per click? Let us understand. If you go to an ad and if you click on the ad, the advertiser gets charged for that particular click. That is cost per click. If you just advertise for branding purpose and you want people to just see your ad, an impression is somewhere when you are browsing the internet or seeing any website, some ad appears on the corner, that is called one impression. So there are different types of advertisements which you can do. You can pay the advertiser either by the number of impressions, the number of times the ad comes. So that is cost per 1,000 impressions. That is one type of ad. Another type is how many times the people click when you pay to them. That is called cost per click. So that these two are non-CPCU types of ads. Now what is CPCU? Cost per converted user. whenever someone is advertising and you make a purchase, ultimately that means you got converted. So from the total cost of advertisement, if if we take the average of the amount, total amount spent, and the number of customers converted who have actually made the purchase, you get per user or per customer cost of conversion. So this is cost per converted user. So majority of the people these days, the advertising brands, they prefer to do cost per converted user type of advertisement, because they know how much they are spending to acquire one customer. And Affle India specializes in this type of ads, where they promote and they are expert in doing better cost per converted user ads. So they try to get the lowest cost of advertising and maximum returns for their customers. In this video, if you have still any questions after my explanation, you can leave the questions in the comments. I will clarify. So the company has a global reach. It has a revenue of about 51.2% from India, and internationally it has a revenue of about 48.8% from Southeast Asia, Middle East and Africa, North America, Europe, Latin America, Japan, Korea and Australia. If you see the market and the industry in which this company operates, the e-commerce market surprisingly is growing at an average rate of about 27.6% every year. And mobile versus desktop advertising spend, if you see the mobile advertising spend in India, it is growing by 32.7 at an average rate every year. So if you see the market in which this company operates, that market is growing at a very rapid pace. If you see the internet users, as you and me know, the internet users in India are growing tremendously day by day, and the digital advertising spend in India is growing by 28.6% average every year. So all the people who were doing traditional advertising like television or hoardings, they are moving to digital advertising right now, and this company is getting more and more advantage. I did not find many companies who are the competitors of Affle India who are listed on the stock exchange, but I could find a few names on Google, which are Consoli Ads, Ad Colony, Mobile Wala, InMobi, Glassbox, and there may be several other platforms. Now, what is the advantage which Affle India has when compared to its competitors, and why would a customer choose Affle India? Affle India provides end-to-end mobile marketing platform. If you go to them and say, I want to advertise this product, right from the idea stage till you get a converted customer, they will give you a complete solution. They have in-house data management platform, so they have been advertising since so many years that they have a very good data of people who have used several mobile devices and responded to several types of ads. So they have that advantage when compared to its competitors. So they have connected over 2.1 billion devices till now. So that much is the data which they have. When you're doing advertising, there is a fear that there may be several chatbots, or there may be some users, fake users, will click on your ads and waste your ads money. So Affle India has a platform where they can detect that fraud and they can remove those ads which are shown to those people to save your cost. So they are developing their fraud detection platform better and better, so that their customers don't waste money and they get maximum results at lower cost. They are getting a license for PaaS, platform as a service model, which will give them an advantage. And the advertisers, they are demanding for the CPCU model more as against the other models in which Affle India has a better position. So they are having a capacity to offer lower cost when compared to its competitors when it comes to the CPCU model. So they have several patents which give them advantage when compared to its competitors. Like they have 3 patents registered in the US for advertising, 10 patents in US and India for digital ad fraud, 1 patent relating to retargeting business, and 4 patents in Singapore. If you see the Indian market, there are certain difficulties for a new company to enter the mobile ad space. The demographics, if you see, there is a wide variation in the buying patterns of people. People are not consistent in their performance, so it's very difficult for a new platform to judge how to advertise to people. And Indian market is very price sensitive, and the user behavior is difficult to predict, and still the penetration is less in India. So due to these conditions, the Indian mobile ads market is difficult to enter into for a new company. But Affle India has these advantages. They have familiarity with the local demographics because they are working in India for several years now. Their algorithm has become very accurate. They have strong network of uh, precise customer targeting, and their track record for delivering profitable ads in the low CPU market is very good. And they have placed better placed due to extensive connected devices profile, proprietary technology which they have, and they have a lot of local understanding and knowledge of the people. So this company has these advantages when compared to some new company which is entering into the mobile ad space in India. What are the growth prospects and how is Affle India expected to grow in the near future? They have acquired a new company recently in which they have took 66.67% stake, and as per their agreement they can even go for a 100% purchase in the near future. Now what is that company? It's a mobile app recommendation platform called appnext. Now I'll explain a little about this. This platform helps users to discover ads which they may applications which they may like through advertisements. So there is a win-win situation in two ways. For an app advertiser, if you develop an advertisement, if you develop an app, you can reach through appnext to millions of people who may use that app. And for a user of app, it will show appropriate suggestions to download good apps for their usage. So the user is also happy, the app developer is also happy. So appnext is a app recommendation platform. So this is a very smart move by Affle India by acquiring this company, as I feel this is a futuristic business model. This platform helps users to find most suitable apps and developers to get more users. Profitable, low cost model, and it is a scalable platform. It has a proven international track record. AppNext is also not a recent company, it has a proven track record, and this acquisition is strengthening their business model, the CPCU business model, even more. So Affle India has enhanced revenue from existing, and they also plan to enhance revenue from the new customers. They want to diversify from mobile advertising to a few more other platforms. They want to deeperly they want to penetrate the markets even deeper in different emerging countries. They want to invest more in their technology. They want to further develop fraud detection platform, and they want to further look for good acquisitions to expand their company. They want to invest in the 4 V's: voice, video, vernacular languages, and verticalization. So I would not get into much details as the video will become longer, but you can clearly understand that they are very smartly growing, acquiring new companies, developing their own platforms, and their future seems to be very bright. They have recently launched another new product called Engage 360. Through this artificial intelligence driven platform, they can advertise to several multiple channels like social media, native ads, video ads, chatbots, app notifications, SMS, you name it, and the Engage 360 platform gives you an option to advertise through all these sources. What are the risks which this company may face? The political and economic risks, the technology change, if the technology changes, but this company is adapting to new technologies at a very quick pace, and the competition, as more and more companies are coming into this space, and there are certain companies which are already into this space internationally, which are bigger and which have a lot of customer data which is more than Affle India, that can be a competition risk. Now, after discussing the business model and the milestones and background about this company, let us discuss the numbers. The financials of the quarter 4 of 2020. The revenue for March 2020 quarter was 80 crores. When compared to the last year, it was 60 crores. So it has grown decently. Compared to the quarter before, which is December 2019, it has fallen down from 94 crores to 80 crores. The profit after tax for March 20 was about 15.29 crores compared to the March 19, which is 14.47. So it has grown year on year, but quarter on quarter from December 2019, it has slightly fallen down. If you see the financial highlights in terms of the CPCU model, let us discuss. They have the CPCU model revenue of about 296 crores, and their average, the company as a whole, the average cost per converted user was about 41 rupees. So if somebody has spent money on advertising, they have converted their customer at an average cost of 41 rupees, and they have converted more than 72.3 million customers this year. If you see the financial year 2020 revenue from operations, the breakup of the revenue, the CPCU revenue was 296 crores, the non-CPCU was about 28 crores. The majority of the revenue comes from the CPCU model, and the enterprise revenue has got a revenue of about 9 crores. So the maximum revenue is from CPCU. If you compare year on year, the revenue is on a rising trend, and the number of converted users have also increased. In financial year 2019, they converted 55 million users. In 2020, they converted 72 million users, and the revenue has also grown year on year. Let us see the trend for the last 3 years. The revenue from operations, the EBITDA, the profit in the last 3 years has been on an increasing trend. The profit after tax has grown at an average rate of about 53%. The EBITDA has grown at an average rate of about 39%, and the revenue has grown at an average rate of 41%. So there is a very good result and growth in the last 3 years. If you see the operating cash flows in the last 3 years, they are growing at an average rate of about 32%. So in terms of cash flows, this company has been getting sufficient cash flows also. If you see the revenue from operations, it is continuously growing. If you see the profit after tax, it has also been growing at a consistent rate. If you see the customer contribution to the revenue, the top 10 customers earlier were contributing about 64.5%. So if you get major revenue just from the top 10 customers, it may be a slightly risky proposition for a company, because even if a couple of customers go away, the revenue will drastically fall down. So the company has realized that, and in the current year, if you see the revenue from the top 10 customers, out of the total revenue, it has gone down to only 45%, and as they go further, it may reduce even further. So this is also a good sign. Let us understand the shareholding pattern. The promoter group is holding about 68.4% of the company, and the mutual funds, banks, insurance and AIFs have been holding about 11.4%. FIIs are holding about 13.9%. So if you see, the institutional investment is also very good. So this shows that a lot of institutions and FIIs are having a lot of confidence in Affle India. The Affle India has been ranked 360 among the Nifty NSE top 500 companies, and they are becoming an constituent of MSCI Domestic Small Cap Index and Nifty Mid Cap 400 and Nifty Small Cap 250. So the the NSE is also recognizing the presence of Affle India. Now let us discuss the yearly financials. The revenue for financial year 2020 is 334 crores, which is increased by 33.83% when compared to the earlier year. The profit is about 65.52 crores, which is up by 34% compared to previous year. The earning per share is 26 rupees, which is up by 30%. So the profit and loss account has been showing very good results. The promoter shareholding is about 68%, and nothing is pledged from this shareholding. The equity has been consistently maintained the same. The reserves of this company are growing very fast. This is an absolutely debt-free company. The cash and bank balance is about 114 crores, and there are several other bank deposits also. The cash flow from operating activities is about 32 crores, and the cash flow used for the purchase of property, plant and equipment and the acquisitions which they have done is about 12.4 crores. So they have positive free cash flows. The company has not been declaring any dividends as they want to invest in their growth. The profit after the profit before depreciation, interest and tax, the PBDIT margin is about 27.29%, which is very good. Net profit margin is about 18%, which is again very decent. The return on equity and return on capital employed are 19.92% and 26.39%. So they are earning sufficient profits compared to their investments. Now let us discuss the valuations. This is something very important and something which we should look at. The last traded price of the stock is about 1512 rupees and the 52-week high and low is 745 to 2296. In the last 1 year or in the last almost 1 year from the day of the IPO, it has given a return of about 73% positive in spite of the lockdown and the fall in the markets. The market capital is about 3851 crores. The PE ratio is 117. This is something which we have to look at. The industry P 17. This industry P may not be a correct figure because there are not many people in the same industry. The earning per share is about 12.9 rupees and the price book ratio is 23 times. I have tried to calculate the intrinsic value as per Benjamin Graham's formula, which comes to about 450 to 500 rupees. So if you see, it is trading at a very high valuation. If you want to know how to calculate the intrinsic value yourself, check the link in the description below. So if the valuations, if you see, they are very high, so either you should have a lot of confidence in this company to invest at these levels, or you should wait for a small correction to get into this stock. If you see the price chart, it has, from the day of the IPO, it has been growing very well except the March fall. But if you see after the March fall also, it has shown a wide, very quick V-shaped recovery and it has almost got back to its earlier levels. I would not say match the same thing, but it has shown a very sharp recovery, which shows that people have a lot of confidence in this company. The recent news and announcements, this company has acquired appnext, which we have discussed earlier, and the COVID, this is something very interesting I'm sharing in this video. The impact of COVID has not been much on this company, or rather you would say the company has come to a more advantageous position because of the lockdown situation. How? Like this: the mobile usage and screen time has increased, the volume of internet traffic has increased, the percentage of transactions in mobiles have increased, people are able to buy ad spaces, this company is able to buy ad spaces at lower cost, and there have been more conversions online. E-commerce has increased wherever there was no lockdown or the lockdown was removed quickly, and all the people were working from home and they are able to sell their products across the globe online through the video conferencing and the several tools comfortably, and the company has positive cash flows even during the COVID time. So this bad thing has come as an advantage to this company, which is again very interesting to note. So this is about Affle India. I am sure you will be able to take the right decision based on the different indicators I have mentioned in this video. To summarize, this is a market leading platform. They have a lot of technology advantage. They have acquired new companies and platforms. This is a futuristic business model. It is a small cap company still, so there is a lot of scope left to grow in future. They have shown consistent growth and performance. Their management is experienced and technologically aware. Geographically, they are expanding to different countries. The company is debt free. There are a lot of big investors who have confidence in this company, but the valuations are very high. So this is about Affle India. I hope you like the video and I am able to justify your expectations. Do leave your feedback in the comments and join my Telegram channel, subscribe to my channel, hit the bell icon and like this video if you like it, and do participate in the YouTube community poll for you to suggest me to on which company I should make the next video. Thanks for watching and have a great day.